a carve out of a community interest in a separate property asset that you had before marriage. Now, moving on to the basics of a forensic accounting project for the high net worth individual, there are several major products or processes or reports that are generated. Okay. And there are several major areas of the divorce litigation that are addressed in the forensic accounting project. These are support, okay, community and separate balance sheet, and the community and separate balance sheet would have below its listings your separate property business, your separate property home, any community carve out, like the Moore Marsden carve out in your separate property home would be on that balance sheet as community and or separate. And the same with a business. If you had a business before marriage and now it is a divorce situation where you brought that business and operated it during the marriage, there may be a carve out within your separate property business of a community interest. And that will be the subject of a further video getting into the details of how those different carve outs are computed. This video is to give you a general familiarity with the forensic accounting process for the high net worth couple in dissolution. So we have the community separate balance sheet, which has all the assets and procedures performed on those assets to find out what the community and separate property interest is. And then in addition to that, okay, we have the support analysis. Support analysis can be done generally in several different ways. We can look at what is the cash flow available for support now. Okay, what was the cash flow available for support at different points during the marriage? Also, we can look at what is the marital standard of living. So even though the couple may have had a significant cash flow available for support, there are situations where they're not living at a standard of living directly connected to the cash flow. There are some couples that live above their standard of living, okay, so they're living at a standard of living greater than the cash flow. They are accumulating debt, or they are depleting one or the other separate property, maybe an inheritance, okay, or they're depleting savings that they had, one or the other had, or they had from a prior period. Okay, so their cash flow available and standard of living are not going to be a direct connection, all right? So then there's marital standard of living. Let's look at what was their standard of living irregardless, okay, of cash flow in a particular year. So some couples are living below the cash flow available standard of living because they might be saving money, okay? They could be taking some money, putting them in retirement accounts, putting them in savings accounts, okay? So then the marital standard of living without the savings component is less than cash flow, all right? And these types of analysis will help a judge or a mediator or a negotiated settlement to determine what should support be, all right? Should support be at the marital standard of living? At what point in the marriage? Should it be the last year of the marriage? Should it be the last 3 years of the marriage? Okay, or should support from one of the spouses be based on cash flow, which, like I said, could be significantly higher or lower than the marital standard of living. So many times we do both these types of analysis to determine what to recommend to the court for our particular party, all right? So the community and separate property balance sheet and the support analysis are two of the major components that a forensic accountant will do for high net worth divorce cases. All right. Now, to briefly talk about some of the major line items that go within the community and separate balance sheet, okay, we would also have a business valuation. Now, previously we talked a little bit about Moore Marsden and the house. So the house is on the balance sheet, okay, and it can be community or separate. And a business started during a marriage can be on the balance sheet as community, or a business started before the marriage, okay, could be someone's separate property, and it could also have a community component. All right. Business valuation. Business valuation is a major project within the forensic accounting. So for your house, you call an appraiser, and the appraiser comes and gives you a report. You can't do that so easily with a business. And within the family code, within cases that have been decided by appeals courts and higher courts, those case write-ups, those case decisions, appellate court decisions, okay, usually have instructions embedded within the opinion on how to compute an interest in a business or how to value a business. And then there's also practice. There's the practice standards of the forensic accountants, generally accepted practice standards on how to value a business. And they would look at different components of the business financial statements, the tax returns, and they would use certain litigation principles within forensic accounting for determining what a business should be valued at. So there could be a significant difference between an economic value for your business. Economic value would mean something like if you called a business broker to sell your business, and what a family law court through forensic accounting would value your business at. They're not necessarily the same, okay? But knowing both of those is important. What is the difference between a sale value through a business broker and the appraised sort of value or the calculated value from a forensic accounting analysis within the community and separate balance sheet for a divorce case? Okay.